Hey everyone, how's it going? It's Rodney Leandro Mastermind here, and I'm bringing you some more analysis for the week on the Forex markets. Like, share, and subscribe if you haven't, and I'll dive into the markets right now. Before we get into it, let's go and look at Forex Factory. This is going to show us what news is going to be affecting what currencies and the type of impact that it's going to have. So we know that red flags means that it's going to have high impact. Orange means medium impact. And next week will be NFP. So non-farm employment change, non-farm payrolls. It just means that there's going to be a lot of volatility in the market, meaning that there will be big moves. The banks will be heavily involved in the markets this week. And yeah, there's going to be big moves. So when there is big moves, there's opportunities and there's also, a little bit of risk. So do be conservative and do be mindful. Only risk 1 to 2% of your account. And if anyone that's in the team in the Discord chats is watching this video, let me know your questions. Just hit me up on my Insta, hit me up on Discord. And if you're not in the team, hit me up on my Insta. It's at mastermindr_. Okay. So the biggest day is going to be Friday. That's NFP. Well, for the US and for the Canadian dollar. There is going to be some speaks on Thursday for the Great British Pound, GDP, gross domestic product, AUD. That's going to be on Wednesday. That will probably have some effect. And then we have some AUD news there, USD news on Wednesday as well. So look out for this, guys. Let's go into the charts. I'm not looking at many currencies now because what I'm doing is less is more. Less is really more. The less currencies you look at, the more opportunities you have. You may not get in the market that often, but if you're now looking for 300 pips, 200 pips from one move, from one pair, that means you're making, if it's 0.01, you'll make £30. 0.1, you'll make £300. A standard 1.00, you make £3,000 from one move. And let's say you're risking about 30 pips, you may lose £3, £30 or £300, but you're gaining 3,300 or 30. So, the risk to reward really makes sense and it's in one's favor. Now, it's not trend trading no more. We switched it up a bit. I still do trend trade a little bit. I do it more for the team, but institutional and waves and structure of the market is a bit more effective. It's good risk to reward, and yeah, this is what we're doing now. But we can see that there was a clear, easy trend trade there. 1, 2, 3. You could have even bought after it. It kind of cleared out this high if you wanted to be safe, or once you saw the rejection, and you could have got in for, let's just go a long position. So let's say you got in once it rejected. You could have risked about, let's say, 36, you would have still been in. You could have caught 200. So the risk to reward on that is 1 to 6. Risking about, let's just call it £36 to catch £220. It's decent. All right, so what do I mean by structure? I mean by, where's market trending? Is it uptrend? Is it downtrend? Is there higher highs, higher lows? What's going on? So as we can see here, there was high, low, high, 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 low, high, 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 low. But what we had here was a kind of shift of momentum, but it was still an uptrend. We had some liquidity here as well. There was liquidity there as well. And what I am looking for from GBP CAD is a sell opportunity. And why I see it going there is there's liquidity here. So there's highs that need to be taken out. There's also an institutional candle up there. There's the last up before the down move. So there's a buy to sell. Price hasn't gone back up there to mitigate. So to mitigate that order means that the banks spared some of their money, or they took a loss, a strategic loss, and they need to go back there to cancel out that loss. So this trade is, and what we can see as well, so there was a shift, but there was a higher high, higher low, so higher high, higher low. That's what we're kind of looking for. And yeah, the sell to buy, is only 88% of the Fibonacci. So that's 1 to 14. We're risking 32 pips to catch around 455 pips, and price should come just beneath the liquidity zone that is right here. So yeah, let me know your thoughts on this, guys, and let's see how it plays out and what happens in the market. Now, if we go to Euro AUD, I didn't see much going on there. Yeah, there wasn't much going on here, so we don't have no entries on that. But price was a downtrend. So you see high low, low low, high low, low low, high low, low low. Then we've had a shift. It's been consolidating. Now what I see, it was trending down, shifted. It should start trending up now. But I don't see anything that would make me get into any trades right now on Euro AUD. Euro USD. So what we're waiting for is 1, 2, 3. So we're waiting for the second wave of an impulse. We saw here, price was trending up, had its higher lows, lower highs. Then we had a break of the structure, shift of momentum. So now what we're looking for is high, low, high, high, higher high, higher high, higher low, higher high, and the higher low here. And there's imbalance. And there was liquidity on this side here as well that got taken out. And what imbalance means is that there was only sell orders, there wasn't no buyers, only sells, and price gapped. So gaps must be filled. Imbalance, 50% of the imbalance. Price beautifully touched and worked off of that area. So with this trade, you're risking 28 pips to catch, oh no, let me go to undo, to catch 211 pips. So you're risking £28 to make £211, or £2,000. I'm risking 280 or £2.80 to catch £21, just depending on what lot size you're using. And we see it coming to these lows or the negative 27. You could clear out these lows as well. So maybe you could catch a bit more than 200 pips. Then GN. So yeah, we saw price trending up, consolidate. Now it should start trending down. With this bias, let me know what you think, guys. So we had some highs. Well, we had some, equal highs, some liquidity got taken out. There's imbalance there, and that's the 50% of the imbalance. So we see price coming either to where I've put the sell entry, or up here. So it's either going to come here. So we may put another order up here. So we'll do 2 twin trades. And what I'll do is I'll split up the 2 twin trades into whatever I would have taken on 1 trade, I'll put it into 2 trades. So I'm halving it, halving the risk. So if it was off of the imbalance, we'll do it right here. risk about 25. And if we're going to the lower low, then it will be around here. So that's risking 25 pips to catch 397 pips. What I'd done to get this area was use the Fibonacci. So we went from, I think it might have been this high to that low, or this high to that low, 78.6, and the measured move. So we had the retracement, the move, see the retracement. So we just copy and pasted it because there's measured moves in the market. And then we see this move after the retracement. So yeah, one or the other for GN. And then we've got this nice liquidity area where people put their stop losses, and banks will target these areas, so they'll drive price to that area. Then for Euro GBP, what did we see? Okay, so we can see that price is making this down move. This may be out, may not happen now. As we can see, it was meant to bounce off of here, come up there, then go down. It's continued to go down. So we might need to look for another entry for Euro GBP. Right, let's go to gold. Gold, whoever caught that move on gold should be happy. If you go to the 30 minutes, there was imbalance here, there was a gap. Price literally whipped off. Let's see if we can see it. Go to the 30 minutes. Can you see that imbalance? That was a great move. So this was after some news, and after gold had some news. As you can see, big money was behind these orders. So yeah, there was a gap right here. Let's say you was gonna get the long right on the 50%. So you risked, look at that, risked 36 pips to go and catch. You could even just put it at the high to go and catch 460 pips, 1 to 12. Whoever caught this, you're laughing, man. You're laughing. I was in it, and then I got stopped out. But I did catch the down move. I did catch the down move. What I done was I scalped. I was scalping. This is what you can do when you're looking at, you know, not too many pairs, and you know how they move. You can become a bit sentimental. So what do we see? So we've seen the wave. We've seen that happen. So now there was 2 areas that needed to be taken out in terms of liquidity. But there's an institutional candle up here, and there's a gap here as well. I think there's a gap, or there's an institutional candle in a 30 minutes. So we're either taking a sell here. If that one misses, then we'll take the sell here. That's 1 to 15. That's 1 to 10. And we're also waiting, once that's done, for price to come back to this institutional area as well. But yeah, so we're waiting for the lower high and lower low. Gold's a really good pair, man. It moves around 400 pips in a day. All you'd really need is that, instead of focusing on too many pairs. What are we looking for on GBP USD? So as we saw, it was going up, came to consolidate. Now it's broken. It's broken that area. So look, that was a nice little trade. Had the highs, took it out, lost up before the down move, came back there to mitigate. You could have got in for a sell. You could have risked 23 pips to catch 185. It's not too bad. It's not too bad. What would have that been a risk to reward wise? Look, 24. catch 188, 7.85. So 1 to 7, 1 to 7, more or less 1 to 8 risk to reward. So yeah, now we've seen it stop consolidating. We've got the lower high, higher high. There's a gap here as well. So it should come back into this area, 50% fill the gap. So that will be the higher high, it's done, lower high, and then go up to complete the higher high. So it's either going to go into the area of the gap or come into this area here, which we saw the 78.6. So this is why we're looking at that area, 78.6 on the fib. Okay. Don't think I saw anything. Did I see anything? Go to the 30 minutes. Yeah, I don't see much on SPX 500. USD JPY. Oh my gosh. I had the perfect entry and then I just didn't set an order. I didn't set a pre-order. So I didn't get in. Look at that. Look at that beautiful entry we had. So we saw the institutional candle. We saw the sell. We saw the buy to sell, the last up for the down move. Price came back up to mitigate, touched it, risking 15 to catch 200. That's 1 to 13, man. But now I'm trying to catch it on the lower side because look, we can see sell to buy last down before the up. And it's 1 to 7, risking 32 to catch 258. So yeah, we see waves. So it's a little bit better than trend trading. Well, it just depends on how you trend trade, what you're looking for, and you back test them. And why should it go back up there? It's formed highs. So if we even take this across now, that's equal highs that it's formed. There's liquidity there that needs to be taken out. The buy to sell there as well. Maybe it needs to come back up there to mitigate. So a couple of reasons, but if anything doesn't make sense, just hit me up with your questions. Didn't see nothing on oil. Didn't see nothing. And if we go to line chart so we can see the BXY, which is the British Pound Index without no gaps, we can see that it is trending up. The pound is trending up. So everything that has GBP first should go up and follow this. Euro GBP should do the opposite. It should go down because GBP is second on that pair. You can see clear, lower high, higher high, lower high, higher high, lower high. So it's going to continue to go up. If we see anything else, and then if we look at the dollar, it's doing the opposite. DXY dollar index, if it wants to load, is it going to load or is my computer? Oh, look, it's loaded now. So as we can see, it's getting lower and lower and lower. So we might see a retracement and then a low. So if you do want to get in for buys on a USD, just buy the retracement and don't buy the actual wave, if you know what I mean, because it's still on a low. So on USD first, so USD JPY for instance, look for buys. Well, no, look for sells. Look for sells unless you're doing a retracement, as I showed you. And gold, look for buys because gold's the opposite, unless you're doing the retracement as well, like I've shown. But yeah, that is everything. Just looking at a few pairs now, trying to catch bigger moves, better risk to reward. You know, less is more. You don't need to take too many trades or be in the market all the time. And just make sure you have the risk to reward that's really good. Have your confirmations that you need, and stick to your strategy. Look at different time frames, and yeah, make a trading journal. Link your account to MyFX book so you can see the growth you've been having. And yeah, have a trading journal, man. It's really, really good. Any questions? Hit me up. Mastermind R underscore Instagram. And if you're in Discord chat, hit me up as well, man. Thanks, guys. Thank you very much for your time. Most important commodity. You never get time back, so thank you for it. Money, you can make it back, and you can lose it, get it back, time you want. So thanks for your time.